Hello, my name is Greg Michalowski from ForexLive.com, and I want to talk to you a little bit about looking for the easy shot in your trading. What do I mean by that? Well, when I look at a chart, I try to set it up with some technical levels that I think are in play. And if we take a look at this chart right here, you can see that the trend is more to the upside. So I like to put a trend line. So I'll put a trend line connecting this low to, let's say, these lows right here. And you can see that the trend line defines which way the market is going. Now I also may look to put a top side trend line, let's say connecting this high to this high right here to see where there might be some resistance up here, and I'll put that in just to understand where a limit might be, where sellers might be interested in coming in the market. Now in addition to those trend lines, I also have moving averages that just sit on my chart, and this blue line right here, this smooth line right here, this is the hourly chart of the euro, is the 100-hour moving average. The green smooth line is always the 200-hour moving average, and these step lines right here, I put an overlay of the 4-hour chart, and the green line represents the 200-bar moving average on the 4-hour chart. The blue line represents the 100-bar moving average on the 4-hour chart. So I have now a trend line, a topside trend line, some moving average lines right here, and what you notice here is that right here where the green 200-hour moving average and the green 200-bar moving average on the 4-hour chart, they intersect right here at the same price. That comes in at 116.73. So if I were to look for an easy shot to buy the market today, this might be the dip where you want to buy against. If the market should come down to that level, that's an easy shot. You sit there and buy against that level. If it goes below, you get out. If it stays above, then you have the opportunity for the market to continue the trend to the upside. Another tool that I like to just put on the chart is the Fibonacci Retracement. So I'm going to put that right here from the most recent low to the high. This is the trend move to the upside, and you can see that the 38.2 the 50% retracement level come in through here. And notice here what happened on the dip down here at the 38.2% retracement. The market found support buyers. Now an easy shot might be to buy against that 38.2% retracement, but we can also match that up with this swing high right here. This was a swing high going back to June 29th, where the market came up to that level and then fell a pretty good ways down off of that level. So it was a key level, or a level that the market came in against. Note here that it also came right against the 200-bar moving average on the 4-hour chart. That was an easy shot on that day. So we have two reasons why the market should bounce off of this level. So if you're a buyer in the euro versus US dollar, we can outline level right here where it might be an easy shot, and a level right here where it might be an easy shot as well. The choice is yours as a trader. How bullish are you? Where do you want to buy the market? Do you want to buy the market down here? Do you want to buy the market right here? That is your choice as a trader. Now another area that might be of interest to you, if say you're a seller, is up here against the topside trend line. Now we didn't quite get to that level, but as the market continues to move higher here, you can see it's having a little bit more trouble. There's some bars here that go up and down, and perhaps the momentum is slowing as you get toward that level. If you're looking for an easy shot, it might be to sell against that top side trend line. If the market goes above it, get out. If the market stays below it, you have the opportunity to pick a high for the market to move lower. Another area that might be of interest is if, let's say, I put a horizontal line right across here. The market moved up to the line right here, came down, moved higher, came down just a little bit above the prior corrective low right here, did it again right here, tried to move higher, lower, high, and then the market broke below this trend line, broke below the line through here that corresponded with this low, this low, this low right here, and the break below the 117.29 opened up the door for the downside, gets below the 100-bar moving average to the 38.2% retracement. That's what I mean about looking for easy shots. You have the opportunity to set up your trade by just just simply putting in lines, having moving averages in your charts, and then looking for those opportunities where there is multiple reasons to trade, where buyers and sellers might look to stall the market on a move to the downside or stall the market on a move to the upside. Take those easy shots. They're there for you each and every day. It's up to you to find them. My name is Greg Michalowski. This was an educational video. If you like it, give me a thumbs up. If you didn't like it, give me a thumbs down. Good fortune with your trading. Bye-bye now.